Hi, in this video I want to go over plan investment selection and best processes when determining the core fund lineup and go over some additional options that different service providers can add to a plan. Here we want to go over some of the best practices. The first step that you want to do is take and determine the investment expertise of the plan participant. This is really going to determine how much specialty funds you want to add to the plan, or if you even want to add them at all. So you want to take a look at their investment expertise and really cater the core lineup to their needs. Some of the other best practices, you want to cover the 9 Morningstar style boxes, so large cap growth, large cap value, etc., etc. You want to add a short-term and intermediate bond and a cash option. Additionally, you could potentially add some risk-based and or target funds. The risk-based, what I'm talking about here is, aggressive, moderate, aggressive, conservative, etc., those type of things. Target date funds, you could look at what those are funds that end, 20 years from retirement, 30 years from retirement, 15 years from retirement. The one thing that you want to, the big debate going on is, are those funds to or through? So there's a lot of information out there, to retirement or through retirement, meaning did the investment stop, are they designed to get you to age 65, or are they intended on getting you through your complete retirement years? So that's the considerations to look at those. So here's kind of the core things you need to look at when putting your core fund list together. So here's some more best practices. You want to limit the specialty funds. You can add those if you've got a workforce that is higher educated, that sort of thing, but you don't want to have a whole lot of specialty funds if you've got a blue collar workforce. So you want to tailor the funds around the educational level of the plan participants as a whole. You want to limit the number of funds to 15 to 20 funds. You don't want to have 40 funds on the fund lineup. The reason being, if you have a ton of funds on the list, the plan participants are going to get kind of that deer in a headlight look. They're not going to know what to do. They're going to have more, really they're going to contact you more often, or the downside of that is they may not participate at all. So you want to limit the number of funds about 15 to 20, because that gives you really the diversification that you need and gives you plenty of options that you can offer to the plan participants. Some other considerations you might look at are adding fixed accounts. If you're dealing with an insurance provider, sometimes they might offer a fixed account. Some stable value funds. If you're either open architecture or even with the provider, some plans provide stable value funds. One thing you might look out for on either one of these is a market value adjustment, and this is a good question to ask the provider or the company offering the fixed accounts or the stable value. If participants move or if the plan moves, is there going to be some sort of adjustment to that particular investment? And other things are contingent deferred sales charges, just like with outside plans. Even inside plans, if the plan were to move, typically these aren't, other than a market value adjustment inside a plan, typically these would be if the plan were to move as a whole. You want to make sure that's something to look at as well. Some other provider options you might want to take a look at: the fund window. Some providers offer what's called a fund window. You've got the core investment options where there's 15 to 20 funds. You limit the specialty funds, but then they also say, well, we've got 500 funds on this platform that you can use. That's also an option to limit the core to just the basic. And if the plan participant wants to do anything outside of the core area, they can go do anything on their own inside the fund window. Also, some providers provide a self-directed brokerage option where they can go buy stocks, bonds, anything, mutual funds, open-ended mutual funds, closed-end funds, ETFs. All of those can be bought through a self-directed brokerage options. Typically within the self-directed brokerage option, they're going to be trading fees and that sort of thing, but that is an option. The last thing, some of the providers have where institutional money managers, where they can offer that inside the plan. So ask these questions of your provider if this is something that you'd be interested in. So when you're selecting the funds, make sure you limit it to about 15 to 20 and look at some of these other different options that you have inside the plan.